traders, welcome to a brand new week of the Forex market analysis. I hope the previous week treated you well. The previous week was slightly good for me, even as the pairs that I had my expectations on met the expectation alright, but then the pip movement for last week wasn't that great. Let us recap on what we had on the watch list for last week before we come on to what we have for this week. So last week on the watch list we had the GBPJPY, the GBPCHF, and the AUD/USD. So for the GBPJPY, we had this wedge to work our way around with, and it met the expectation of breaking below the support level of the wedge. The GBPJPY actually did that and stayed below the level, but then the bears lacked the momentum to go deep down. For the GBPCHF, which also met the expectation of breaking above this marked resistance level, it actually did the break, retested it, went up and lost most of its gains to end the week. I was actually looking at a positive correlation between the GBPJPY and the GBPCHF, but then correlation turned negative. Correlation is actually not static. And for the AUD/USD, it also met the expectation of breaking below the support of this market structure, and then the bears stayed below the support of the level, but as usual the pip movement wasn't that great. So let us come on to what we have for this week, which are the GBPUSD, the GBPJPY again, it makes it into this week as well, and the NZDUSD. Starting with the GBPUSD, we have a weekly range of about 200 pips to work our way around with. 200 pips per week would be too much for some pairs, but not for this pair, which is the GBPUSD. The GBPUSD in the past 3 or so weeks has been having a weekly range of 900 to 1000. Let us check it out. So in the past 3 weeks, we've had a pip movement of about, this week we had a week of about 900 pips. The next week we had 1000 pip week, and 2 weeks ago we had another 1000 pip week. So considering this fact, $200 pips a week for the GBPUSD is actually small. Because of that, we will be looking to trade the weekly break for the GBPUSD. So in the coming week, there won't be much to do as long as the GBPUSD trades within the range, but then the market will find direction after the break of this resistance level, which is the weekly high, or the break of this support level, which is the weekly low, comes in on a 4-hour time frame basis. Quickly on to the GBPJPY, which is supposed to positively correlate with the GBPJPY. We can have a similar structure on it, but then we have this wedge on it already, so we'll be working much more with the wedge. So the GBPJPY sits comfortably below the support of the wedge. So in the coming week, for the bears to take control or for bearish confirmation, the GBPJPY needs a 4-hour bearish candlestick close below the 132.394 level, which has been represented with the black line. If the close below this level never comes, GBPJPY may just decide to trade within this range, and there won't be much to do. Or when it goes above this resistance level, then I'll let go of my bearish bias. Finally, on to the NZDUSD. which has a similar setup to that of the GBPJPY. We have a wedge over here. Price comfortably sits below the support of the wedge, so the bears have their work cut out for them. In the coming week, a break below this level, which is the 0.58385, will be a bearish confirmation. The break should come on a 4-hour time frame basis. If the break below that level never comes and the NZD/USD keeps trading within this area, there wouldn't be much to do. Also, one thing to note is that ever since the NZD/USD broke below the support of the rising wedge, it has been moving in some sort of a downtrend, which has prompted this trend line. So in the coming week, when NZD/USD manages to go above the trend line, I would let go of my bearish bias. But then solely in the coming week, I'll be mostly looking out for a break below this level, which has been represented by the black line as a bearish confirmation. So that is it for the coming week. I wish you a profitable trading week. See you next week.